So I will ask my panelists to take some time to introduce themselves before we get into the substance of the debate. I'll start from my extreme left with Alex. Thanks.
Hi. Wow. My name's Alex Katon. I'm with Infraco Africa. I'm not sure if this is my 5-minute slot or just to give my name, but I'll say a bit more anyway. So Infraco Africa, as mentioned briefly by Electra earlier on, is an infrastructure project finance vehicle. Provides both capital and expertise to develop very early stage infrastructure projects. So our starting point is getting a site, starting to measure wind in the case of a wind project. In the case of a hydro project, it's hydro studies. So we take very, very early development risk on projects. Some of the speakers on the first panel today from the private equity business using a lot of terms about risk capital, about exit multiples, cash multiples. And I guess that's the business we're in. It really is risk capital. It's very early stage. It's binary. Either the project happens and you get your money back, maybe a bit on top, or it doesn't happen and you lose all your money. So in terms of, is it a successful, profitable business, developing early stage infrastructure projects, our geographical mandate, if you like, is the mid 40 countries in Africa. So Infraco will only go between north and south. Our mandate is defined by, is it a post-conflict fragile state? Is it DAC 1 or DAC 2? DAC 1 or DAC 2 means what's the average, is based on the average level of per capita income in the country. So we're focused on the tough markets. Our money comes, so my company is capitalized. We have equity investment from 4 European governments into our little limited company in the UK. And we work with a series of developer teams, Electra being our principal developer team. We also work and have a contract with Aldwych, and Helen Tannoy was on the panel earlier today. And then we work with a third group of developers, what we call co-developments, which is one group of developers who have a project. They come to us and say, will you back us at this early stage to try and get this project to financial close? What kind of deal can we come to together? And there's some guys from our Western Power Project, which is in Western Province of Zambia. So APP are one of our other developer teams who are here in the room today, developing. In that case, it's a kind of 50 megawatt, roughly, Runner River hydro project, early stage in Zambia. I've nearly got to my 5 minutes, so the other thing to say was just last year we signed 5 new deals in kind of mid-Africa, which in our business is a real success. In the context, the previous 3 years we'd signed 2. So 5 new deals, all in renewable energy, 2 hydro, 2 solar, and 1 geothermal. And when I say signed a new deal, it means we signed a binding development agreement to commit capital to the development phase of that project to get it to close. So total capital commitment in those 5 projects for us is about $36 million. So we're committing, whatever that comes to on average, roughly slightly about $7 million per project. And we normally spend on average, I guess, between $5 and $10 million getting a project to financial close. Some of the heavy legal costs we heard earlier in that Nigerian project, $20 million for legal costs. We hope not to see that in our projects. But we do spend an average of about 10, and the average project development time, we talked about patient or committed capital. So our average time in developing a project, I'll try not to look at Tom as I say this, but it is about 5.5 years on average on the 8 projects we've closed, or we've got to financial close to date. We've been running, as Ebbe mentioned, around about just over 12 years now. So most of those projects developed and closed by Electra, in fact all of them. So 8 projects closed by them, and we're now working with Aldwych on a project in Chad, which is one of our new solar projects, a 40 megawatt PV project in Chad. And then we're also working with companies like Berkeley Energy and their geothermal project in Ethiopia, and a series of other hydro projects, and a small renewable energy PV rental business, which I'll talk about a bit later. If we come to alternative financing structures and SPACs, we're kind of trying to link that containerized PV rental business into a different kind of financing for development finance, which is investing in companies that are developing projects, trying to get away from this traditional and very time-consuming, expensive project finance model. Thank you.
Thanks, Alex, for that very detailed introduction. Alex, let me go over to you. The other form of vehicles are SPVs. They are growing in significance as a resource for developers to access capital. Could you tell us about InfraCo? What more SPVs can do to facilitate finance for developers on the continent? And also, could you please tell us about all the latest ways that you're trying to innovate to access more capital in some of your projects?
Okay, thanks. So SPVs, or special purpose vehicles, most the people in the room I'm sure will be familiar with the idea of setting up an individual company which has a specific objective, hence special purpose vehicle. In project finance transactions, that's very standard as the asset owning company that will then be set up as a non-recourse vehicle. So project sponsors can raise bank debt and can raise finance on a balance sheet related to that project only, without effectively increasing the gearing on its parent company or its investors' balance sheets. And we see these in most of our projects that are incorporated in different places, and we have a limited number of jurisdictions where we can incorporate these special purpose vehicles because of the particularly more focus with recent tax haven scandals in the UK. But Mauritius is the most common place for our projects to be incorporated. PV. We're starting to look at projects that aren't incorporated as SPVs, that aren't standalone project vehicles. And I mentioned one which is a containerized PV rental business, which is incorporated in Tanzania as a trading company in Tanzania, as a limited company. And the difference here is that we're starting with a much smaller project. Here we may be investing $5 million in a project to get that business up and running. Now, in that case, there was some seed capital came in from the Shell Foundation. So Shell had gone in to back the research and development part of this project, which was to develop a containerized PV solution. So with a control system, all the PV panels were packed into the container, and they had a patent for a special hinge that allows this containerized power project to be deployed in 5 days. So 5 days from getting the container to the site, having all your panels pegged out and plugged into the control system. So as long as your customer has a wire that can plug into your container, you have an operating power plant literally in 5 days. We didn't really believe this because, as I said, our average deal time is about 5.5 years to get something even to financial close. So we put some money into this project back in December 2015, and the first 2 containerized PV solutions, mini power plants, are running in Tanzania now within 3 months. And from getting to site, it really was 5 days to get them up and running. So this is an example, if you like, of a much quicker form of financing. And it is in some ways similar to a special purpose acquisition company in that we made capital available and with Shell Foundation and other European investors raised some money through a series of special purpose vehicles and backed a management team who had experience, which is the similarity, I think, with SPACs. In the context of a traditional SPAC, it really is to acquire an operating vehicle. In this case, with our project in Tanzania, we are backing a management team through a corporate vehicle. And we're looking in Tanzania at another similar project finance alternative transaction, which is a way to develop mini hydro projects. So again, mini hydro projects traditionally, people talked about if it's not $50 or $100 million, don't bother trying to project finance it. And we've got, and again, Electra, Ebe in the corner, we've got scars to show how difficult it is to project finance a $50 million project, which we did in Uganda on Lake Victoria. We set up an island utility with 4 different components to it. So ferries, a mini grid and power generation, PV, solar diesel hybrid power plant, and a water purification distribution system, all neatly packaged, contracts negotiated, the lawyers had a field day. It took about 8 years to negotiate all those agreements and start the project. And Nedbank, by the way, if there's any South African banks, as well as Standard Bank, but the South African banks, Nedbank in that case, came in, and we managed to project finance it in the end. But the lesson learned from that is, if it's small, try and do it on balance sheet with either just your own balance sheet or a couple of partners to get these things up and running quicker. And in the case of the mini hydros we're looking at, we'll do one plant on balance sheet, so raising $15 to $20 million is not impossible. from either one or two institutions or institutional investors. And then you can start to leverage as you move on to number 2 and number 3. So building a mini portfolio of mini hydros is how we think you can get mini hydro operating on the grid. And we're looking at that in Zambia, and we're looking at it in Tanzania. So there's a couple of examples, if you like, of alternative structures. And don't get me wrong, I think project finance is still going to be the way on the bigger projects. It's still going to have a huge role. But there are alternatives, like the way the mobile phones businesses started up 15 years ago in Africa. They started small and grew rapidly through technology. And some of the off-grid, which is what Rodavia, our investment in Tanzania is, these off-grid projects can grow very rapidly. You're already starting to see secondary investors coming into a similar business in Kenya and suddenly investing $40 million to grow expansion capital in the off-grid space. So we think we do need different financing structures, and we're starting to put some InfraCo balance sheet and our shareholders' money into those structures.
Thanks, Alex.
Doing business in Africa, you can't afford to be without Africa Investor.